Good morning. Welcome back. Okay. Excuse me. 1 sec, guys. Okay. Well, geez, what's with this thing? All right, we give another shot here. Okay, so markets looked like they were heading up toward that resistance area, and many of these indices are coming up to their respective areas, and they're in a downtrend on the weekly time frame. Monthlies have broken down, so the assumption is they're going to go lower. At some point. They've been relentless as far as, moving from the low point right after Christmas with like one down day. They moved down here. Now, and you can see here the futures are lower this morning. So, of course, that gives the question as to whether this is put in a short-term high. We look at the futures. However, each time they've opened lower before, buyers show up in the first half hour or so. Morning, Pat. And, the markets either stabilize or they move back up again. So we'll see if that's the same result this morning. Before we get to one of the other things, just the internals that we talked about last week, for those that may have not been here. So last week on Friday, we got the beginnings of the wrong way option traders starting to step up and buy more call options than put options. And it kind of just missed closing up above that extreme level. Intraday, it was like 0.67. I forget. I mentioned it in the room. And so this now is starting to move the moving average up toward those upper bands. And that's what we look for a sell signal. Is for them to be in alignment with each other. And what we look for is, the alignment here of breadth and sentiment, and that hasn't happened. So we're going to be watching this closely this week to see if this moves up into that area. Doesn't have to get to 0.80 after such a bearish move to the downside, and that's what these bands do. They adjust lower for a more bearish market environment and higher for a more bullish one. But that 0.8 is the static level, and 1.2 is the static bearish level. And you see where it got to back there when it had moved down and the low was set. So we want to see. That has kind of been the fly in the ointment for the potential turn that tried to happen here. And now we're moving up. The 200 MA is right up there, lurking up above on the majority of indices. I noticed, or if you've noticed, the internet index, which has done well, is already up there. Let's just get this out of the way. And here we go. You can see it's right up at its 200 MA, and it's actually cleared this prior high here. So that has shown relative strength compared to a lot of the other sectors and the broader markets. So not necessarily what you might think of, maybe the names that come to mind, like the Facebooks and whatever. There's a lot of smaller stocks, than those that have been leading the way up. We can take a look at those later. In any event, Qs, pretty far distance from the 200, but we've got this resistance area right here. The Russell, pretty similar, just kind of cleared that area. So that looks good. And I actually looking at this over the weekend, my thoughts were, well, the wrong way option traders haven't pressed it yet. Typically, they go all in at the worst time, like down here. So I thought maybe this would accelerate higher up into this resistance area, since you can see how it picked up on Thursday out of the consolidation. And then while Friday was a narrower range day, it gapped up and it held the gap. And looking at this intraday, where's my little, anyway, it held on to the gain. Had that little pullback in the afternoon, and then buyers stepped up again. So, no one was running for the exits last Friday, and the prior week was the same thing into the close. It held on. So, confidence there, and we have to be somewhat skeptical since it's been moving up since just after Christmas. As far as it is, there is some resistance, but we need to see it at least close below a prior day's low. That hasn't happened yet. And you had it happen one time here, and that looked like the possible turn, and back up it went. So that's by the end of today, we'll see whether we have another extension to the upside or whether we have a red bar closing below Friday's close. It will give us some indication as to a possible turning point or a continuation to move higher. Transports moved up. So at the end of the week, it was like everything started to click, meaning the hesitation in the transports and their relative weakness, they start playing catch up. I talked about that last week that, where they were starting to turn last year, the transports often played what we call catch up, meaning the weak one begins to accelerate and catch up with the stronger ones. So that's something we're going to keep an eye on to see. They accelerate. And this was another picture of why I thought, hey, maybe this is going to just accelerate with a climactic move to the upside. The wrong way option traders would load up on calls, and then we'd have that high point in alignment with the weekly downtrend. I was uncertain about that. Now, transports, I don't trade too actively pre-market, but you can see they're just doing nothing here. And the diamonds, the 200 is lurking just up above there. And we got the same kind of pattern where Thursday picked up steam and Friday went higher. And it just seemed logical that, okay, you can hit the 200. And what I wrote in the letter was I wouldn't be surprised since this has shown some relative strength. And I measure that by its closeness to the 200 versus those other markets that we looked at, not the internet, but the spiders, Qs, Russell, and transports, that if those continue to go higher, the Dow could actually clear the 200, and then we'd have the media, singing the praises of the strength and close above the 200, yada, yada. And, with everything being in weekly downtrends, wrong way option traders stepping up, we'd have a short-term sell signal or area where things would turn down. So we'll see if that actually plays out. We have scenarios, good, positive turning points or bearish, and we see what actually happens. So here's the S&P futures. This was our second reference area of resistance, which they pushed into on Friday. And because this is a 24-hour chart versus what we call the day chart, you don't see the gaps. Now, you'll notice that the range expanded because it's a 24-hour chart. Let's just look at the difference here. All right. So it went down and back up. You got that bottoming tail bar, but you don't see the gap to the extent that you do on the day chart. So it started near the prior day's close, and now we got a bar that begins to expand the range. It opens near the low, it closes near the high, and that's the kind of bar that suggests you're close to a stall in the momentum, meaning these wide range bars are igniting the move higher. And then you see the momentum begin to stall at this resistance area, and it went sideways. And so this is the concept that we call absorbing the supply. That resistance demand is absorbing the supply. And another way of saying it is it's bullish price action rather than pulling back, it corrects through time, and then it continued to move higher from there. So it went up to the next resistance reference point. This was like a little mini void, as we call it. So now we've got this gap down, and the futures are just kind of grinding their way down. And this is what we'd kind of refer to as, and it's getting a little long for it, but we'd refer to it as a bull flag, meaning you have an accelerated move. That's kind of your flag pole. And this is supposed to be your flag where it's sloping down. And that's supposed to resolve itself to the upside once it clears that resistance. We'll see. As mentioned, these gap downs, these minor gap downs that have occurred on the way up have been bought, usually by 10 or 10:30, and then the markets continue higher. So something to keep in mind is that this weakness, maybe it continues into 10 o'clock. If it can clear this area, well, that might move. But look, if it keeps inching down, the longer it stays down, the greater the uneasiness of buyers will become that, the forces aren't bringing up the rear to push this higher. So we're kind of just waiting to see here whether they do show up or whether the selling, this what I call mild selling, continues. And so, as mentioned, does this close below this low today? That would be a pretty bearish sign. As you compare, these bars as they moved up, it would be a pretty distinct difference in what happened, and the location of where that is would be very telling, as opposed to, hey, at 10 o'clock or 10:30, buyers show up, this becomes a green bar and pushing up to the 200. And we'll see what happens. Now, all of this, thinking of a turn, where the hell was there? Now it's missing. There it is. I have a little thing to switch time frames. This is in a 200 crack, tried to hold, next crack lower, retracement up into resistance, basic trend analysis, technical analysis 101, downtrend, retracement to resistance, sellers. Let's see if we can produce a reversal signal, and we go from there. All right. Cues, mentioned this probably last week, that most of these markets are moving in lockstep with each other. And I think in part, the reason for this extreme that we have in breadth, because everything is moving together. So typically doesn't get this high. And, in the advisory letter, I showed the long-term breadth internal, which is now at an extreme as well. It doesn't happen that often. ES weekly, the overlap above matter or only to the left? Well, let's look at that so I know exactly what you're referring to. It's always what's directly to the left. So you've got all of this overlap. This is meaningless. Right? So everything from an educational point of view, and the MTS and everything I've taught over the years was how I helped myself to make sense out of charts. Meaning, how far to the left do I look? If I go over here, why shouldn't I look at this? And that in part started by seeing, not a pattern particularly like this, but seeing price patterns that would confuse me as to why was this possible if the theories of support and resistance that are pretty commonplace, why didn't they have an effect on prices? So one of the rules is if it's traded above and below, this has been neutralized, so forget it. You can see this is in the same area and why this actually stabilized here. So when it failed, it accelerated lower. You mean December bars? These bars right here, Tony, that's what's directly to the left. So that is what we need to pay attention to. That's directly to the left there. Well, sure, it's overlapped. So in theory, it's a more potent reference point of price resistance. So when we look at something like that, we say, and I like that. It is what it is. Does that mean prices, would it be impossible for them to go through? No, we can't say it's impossible, because in the markets, what we perceive to be the impossible actually happens at times. So we have to be open-minded about that and say, yes, there is a reference point here that suggests it's going to be very difficult to get through. Well, at what is the exact point that it can't get through? Is it here? Is it here? Or is it at the top of the range? None of us could say. But what we do know is that the least amount that it can get into that range, the weaker it really is. So if it would have reversed here and turned down, that would have been, let's say, the weakest versus, well, over here, we would have been looking for a W bottom, and we were, and that didn't happen. So this would have been the weakest. Right here, we would say this is the middle strength that it could have happened from here to here. And if it was to rally all the way up to the top, I would say, geez, as nasty as this was a decline, this has been able to retrace 100% of this decline. And however bearish we were here, and even here, as to this is the probability of a turn, we have to be saying this market is a bit different than historical markets that have had and experienced such nasty breaks. And that's part of our rules as we apply them to retracement theory. Not about Fibonacci's, just about common sense, understanding that in a drop like this, weaker markets stop at the first resistance. Here, it's gone up to the next. And if it goes up here, well, of course, we're going to be thinking bullish. Wow, that's amazing. And looking at the weekly time frames, all right, we're going to have a monster move to the top here. Now, I'm not saying that's going to happen. It's just giving you an understanding of how to make common sense out of what's going on. So, again, break, stabilization, measured move lower, retracement into resistance. This is the area which should turn. And we have our three-legged stool, techno fundamentals. What are our internals telling us? Well, breadth isn't there yet. We start looking at other markets. I don't have time for that. It's getting late, but different sectors to see what they're doing, relative strength and weakness. We've seen interest rates recover and start to move up, so that concerns of an inverted yield curve have eased for now. So we put all of that information together, to make educated assessments about what's happening in the broader markets and sectors and stocks and so on. All right, so going through the same thing there, so I can get Dan on here. Dow closer to the 200, bonds stabilizing but inch lower, and that's why bond prices moving down, intermediate to long-term interest rates moving up. That alleviates that concern of the inverted yield curve, and so that's been a help. Oil continues to act well here at this resistance. It's moved up. We'll see if this continues moving up or whether it's a breakout failure. And gold is inching down, and it's kind of been a weird kind of move as to the gold miners haven't participated in the same trending kind of a fashion, and so on. So that's it. All yours, Dan.
All right, thanks. Good morning, folks. Hey, Neil, I saw you made a comment about our new trade sheet. Still trying to get the proper one posted to the weekly and get it updated. But yeah, we've spent a lot of time on that with our Excel expert, trying to make it more helpful with some share size calculations under the hood. But let's look at opens. Netflix in the weekly. This is our only open trade, bear call credit spread for this Friday. DNR, we've been watching this little oil guy for a while, and it gapped over our entry right here, and now it's consolidating fine. So I went ahead and said, it's now ready to go again. It went sideways for 2 weeks. So over 230. Tandem, we have 25% position with a covered call. The one expired worthless last week, and then we did it again for this week. Verizon, we're short stock, and it's opening flat right now. Procter & Gamble, we're short, and that's down a little bit. Disney, we're short. That's fine. We're watching a double bottom in CVS here. XOP looks great as a continuation. Swing trade long, and then we'll just, because of the overbought markets, we'll just see how far it wants to go. Halliburton. Yeah, that was another nice consolidation, a little, gap and go. I mean, this pattern, it's at resistance, but it still says higher. That's it for opens. I got a bunch of gappers here. Let's take a look at Redfin 1776. So it's gapping under or right to Friday's low. And it's a lot of green bars in a row. So that is a day trade short watch. BAK, 26 bucks. So it's a bullish gap. Excuse me, under resistance. Keep an eye on it. SWK, 120. So way down here. Now, if it can stabilize here in the first 30 minutes, then it's actually an iron condor candidate. If we can sell the 140s, we got all that resistance. We got a nice bottom here. So that's just what I'm thinking. USB, what's down 10%? Halliburton's? Really? Oh, SWK. UBS had earnings. I don't like these foreign stocks. I'm just going to get rid of him. I don't like the way this trades on the daily. It actually looks like a buyout almost, the way it's trading pre-market here. So tight at 165. But that is a monstrous gap. And this is why I tell people, don't even worry about the price. Look at the picture. So it got extended. You had a little shakeout on the downside. Now it's gapping over this high. There's nothing to do with that. Texas, TX, if there's not good volume, but if that's a gap to 30, then it looks good. Staff, another little guy, 320, another big gapper, but I don't know. It's not in my trading plan. It's that daily chart. GPS, 25 bucks. Nothing to do there. Pets, that's a very bearish gap on pets. Let's see. Well, the problem is, you see how we look at multiple time frames? Let's say hypothetically the same pattern was way the heck up here at 33 bucks, and then you had a bearish gap. You got a price for it to go lower. Now it's gapping to 20 bucks. Look at all these overlapping bars. That's support. I got no interest in that. Zyop, 235. I see absolutely nothing. Sergeant Schultz, I see absolutely nothing. ARNC got whacked pretty good here. 15 bucks pre-market, snapping a little bit. There's nothing to this. I'm seeing nothing. I don't have one tier one setup right now. eBay. I just love when these guys come out of the closet and they're like, oh, guess what? I just accumulated 1.4 billion position, and nothing fundamentally changed except some rich guy saying that he's been accumulating it. That's the herd mentality. It's really amazing to me. But that is a bullish gap. Look on the weekly here, though. It's gapping to